Positive EU post Fed announcement, post ECB, post German constitutional vote. Do you think things look a lot better now for equities?
The clear winners are the commodity plays. We saw iron ore prices jumping by 5.7% on Friday, and we saw copper prices up by 3.8% in London, 2.9% in New York. Whether or not the Australian share market is going to be a winner is another case altogether. During QE1, we saw the Australian market up by just 7%. And if we have a look at QE2, and if I can just bring you to a 5-year chart of the Australian share market, this is what it looks like. And this is really QE2, where we actually saw the Australian market decreasing during that time because of pressure on earnings due to the global environment, as well as the high Australian dollar, which is a headwind. So looking at quantitative easing in the short term, it's good news for our market. We receive a boost from the largest place on our market, which is the materials and that mining space. However, longer term, it really does depend on that global backdrop. If we have a look at the market today, we started to see some concerns around inflation, and of course quantitative easing has usually meant that commodities, both hard and soft commodities, rise. So food price pressures as well as commodity price pressures, and China showing signs that it's not willing to allow another property bubble to happen. Over in Hong Kong, we saw the limit on the term of mortgages capped at 30 years, and also 40% of incomes down from a level of 50%. So we did see the Shanghai Composite coming under pressure today. As Michael mentioned, the healthcare space, the worst performing area, but we did see CSL and Primary in that area trading ex-dividend, and it was unusual seeing that economic data out today. Car sales once again hitting a record. We've seen a good number out for August, but unfortunately those companies listed on the Australian market related to car sales, such as carsales.com, AP Eagers, as well as Automotive Holdings, all finishing with losses today. So a bit of an unusual performance by the Australian share market, but the clear winner today, commodities, and commodities should be the clear winner from quantitative easing.
More, I guess, stock-specific stuff now, Julia. We've got Macmahon. Now, this is one, it looks like it's headed for a downgrade. We're preparing for bad news. It's in a trading halt. We heard such good things during reporting season. Did management talk things up too much, Julia?
I think the surprise here is that just around a month ago, we heard a guidance from Macmahon saying that they do expect earnings growth of 20% in the current financial year. So a month after that, to come out in a trading halt with a possible downgrade due to their construction division is quite disappointing. If we have a look at Macmahon in their last result, we actually saw revenue up by 49%, and a key driver of that was their construction division, which increased revenue by a massive 71%. That's compared to their mining unit, which increased revenue by 31%. And I guess over the last month we've really been concentrating on their mining division because of exposure to Fortescue, as well as BHP being their largest client. But the construction side of the business looks like the part that's going to really let them down this time around, and it does. There are echoes of the 2010 downgrade that we saw, and back in 2010 we saw a profit downgrade. It was quite a severe one. That was due to its construction unit and due to, I guess, some of their contracts, as well as lack of wins in that area. Contracts in construction do tend to be quite big, and a lot of the construction is still being driven by that mining space and infrastructure for mining. So we are awaiting this one, but unfortunately the market's not going to like an earnings downgrade so close to an earnings result coming out, and I guess it will sour sentiment in Macmahon stock.
Sound to you in terms of chances of a takeover here?
Today, but in terms of the underlying business as well, we've come to almost an end to some of those problem projects which have really plagued Leightons and led to a lot of write-downs over the last few years. So coming to the end of the desalination plan, the Victorian desalination plan at the end of the year, as well as the airport link. Looking at that big parcel of shares, 850,000 shares going through after hours on Friday at a premium of 30 cents. Whoever's done and bought that parcel of shares is already in the money, because we did see that crossing at $16.03, but of course we saw that those shares today closing above $17, so they would have been quite profitable on that. But of course it was on the back of that newspaper report. Now, Vince, you interested in ACS or HOTIF and some of the operations there, and Leighton's having a wonderful performance, especially given over the last few weeks we've seen the shares down at a 52-week low, so strongly bouncing back and looking like there may be a floor on the price now.